Yo, what's up, guys? It's me here. And today I want to talk to you about what to do with your first $100. So, if you have $100 and you've never invested before in your life, this is for you. Because I am going to walk you through step by step exactly what you need to do with that money so that it starts working for you and can eventually become $1 million one day. And let me just tell you right off the bat that this advice is not gonna be popular. I'm not saying buy Bitcoin, Ethereum, Dogecoin, GameStop, Tesla stock, or some other type of alternative investment like gold or no. Instead, I'm gonna tell you to do something that kind of goes against everything you see in the media. And I think is the absolute best thing for most beginners to do when they're starting out. So let's talk about the best ways to invest your first $100. But a quick question before we begin. Are you ready to retire as a millionaire? If so, smash the like button. And for those who don't know, I post weekly content on investing, personal finance, entrepreneurship, and more. So consider subscribing and let's begin. All right, so here's my issue with all the get rich quick schemes, gurus, and influencers on YouTube, TikTok, and Instagram. They always give advice on what to do with your money. But what you rarely hear from them is anything about actually creating wealth. For example, recently there was a major shift in the market where the Nasdaq had its worst week since March 2020. That means stocks were down across the board with tech companies like Tesla falling over 10%. And guess what? This is totally normal. In fact, this is exactly what you want to see in the markets. Why? Well, look no further than Warren Buffett, one of the greatest investors of our time, who said, be fearful when others are greedy and greedy when others are fearful. The point is, whenever you have a bunch of people buying in, stocks are going up. And everything seems like it's going too good to be true. That's usually when things are at a peak and you should probably be selling. Conversely, when everything is falling and everyone is selling, that's usually when you should be buying. Now, obviously, I'm not saying that you would have known any of this or could have predicted any of this. But the moral of the story is investing isn't about timing the markets or trying to find the next hot stock that's going to make you millions overnight. Instead, the key to making money in the stock market is patience and consistency. So now that we've established that investing is a long-term game, let's talk about the best way to play that game. First, the absolute best place to start if you're new to investing is an S&P 500 ETF. Now, for those who don't know, an ETF stands for Exchange Traded Fund. It's essentially a basket of securities that contains a bunch of different stocks all bundled into one. So, for example, an S&P 500 ETF will contain a slice of every single company that S within the index. And because of this, you get instant diversification the moment you buy in. Plus, in terms of what an S&P 500 ETF actually is, it consists of the top 500 publicly traded companies in the US based on market cap, which is just a fancy way of saying these are the 500 largest companies in America by value. Some of these include Apple, Microsoft, Google, Amazon, and even smaller companies like Costco, Nike, and Starbucks. And because of this combination, the S&P 500 tends to be a lot more stable compared to individual stocks. For example, let's just say you decided to invest your entire portfolio in GameStop because you thought the stock was going to now go to the moon. Well, that would have been a terrible decision because despite the hype, GameStop is still a dying business and the stock is now down more than 90% since the peak. But an S&P 500 ETF wouldn't have done that. Because it is diversified across hundreds of different companies, some of which may be doing poorly while others are doing well. Overall, though, the S&P 500 has shown to have some of the highest risk-adjusted returns in history, meaning you get the highest return for the level of risk that you're taking on. Not to mention the S&P 500 has a positive correlation with inflation, meaning it tends to go up whenever inflation goes up, and it tends to go down whenever inflation goes down. In fact, from 1926 to 2021, the S&P 500 returned an average annual gain of around 10.49%, which means if you just bought in and get absolutely nothing, you would have seen your money grow over time. Of course, I'm not saying that investing in the S&P 500 is without risks. The stock market does fluctuate on a daily basis, and there will inevitably be times where your investment loses value. But generally speaking, the S&P 500 does a really good job of recovering from downturns pretty quickly. For example, after the 2008 Great Recession, the market bottomed out in March 2009. And from there, it took less than 2 years to recover back to pre-recession levels. Similarly, after the pandemic crash of 2020, the S&P 500 bottomed out in March 2020, and by August, it had already recovered to pre-pandemic levels. All of this brings me to my main point, which is that the stock market historically has proven to be one of the most reliable long-term investments ever. It provides good returns, beats inflation, and gives you instant diversification the moment you buy in. And if you're someone who's just starting out, it's really hard to go wrong with that. So then what is the best S&P 500 ETF? There's actually a couple options to choose from. You have the Spider S&P 500 ETF, which is ticker symbol SPY, or you have the Vanguard S&P 500 ETF, which is ticker symbol VOO. Both of these are great options and are essentially identical. The only real difference is that SPY has a 1.5 expense ratio, while VOO is slightly lower at 0.3%. However, I personally use and recommend SPY overview simply because it has slightly more trading volume, which means it's easier to buy and sell shares throughout the day. So that brings us to the final question, which is how much do you need to invest? Well, the minimum amount of money required to invest in an ETF is whatever you have available to invest. There's no minimum requirement. For example, with Webull, which is the platform I use, you can invest as much or as little as you like. So technically, you can invest $100 into an S&P 500 ETF if you wanted to. Of course, keep in mind, the more money you invest, the more money you can potentially make. And in terms of my own experience, I started investing $100 a month into the S&P 500 when I turned 18 years old. So that came out to roughly $1,000 a year. And as of recording, I've made a total of $4,700 since I started. That means I'm up about 36% on my investment, which is incredible considering I've done absolutely nothing. Overall, investing in the S&P 500 is one of the best, if not the absolute best ways to start investing. It has strong long-term returns, low fees, it's relatively easy to understand, and it's also the most tax-efficient way to build wealth. That's why my one recommendation for anyone starting out is to invest at least $100 into an S&P 500 ETF like SPY or VOO on a consistent basis, whether that's once a month, once a quarter, or once a year. The stock market has historically proven to be one of the best investments ever. And by investing early and often, you'll take advantage of dollar cost averaging, which is just a fancy way of saying you'll get an average price that's lower than the current price. Ultimately, building wealth doesn't happen overnight. It takes patience and consistency. And if you stick to this strategy over the next 10, 20, or 30 years, you'll eventually be able to retire a millionaire. So with that said, you guys, thank you so much for watching. I really appreciate it. Also, make sure to like and subscribe. Thank you so much for watching, and until next time.